My top 10 stocks for 2023. Investors are unsure of which equities to gamble on as the possibility of a recession continues to lurk over the current bear market. The community of analysts anticipates volatility to persist in the foreseeable future as a result of inflation, rising interest rates, and geopolitical upheaval. It goes without saying that it's crucial to maintain a careful watch on the market and form your own opinions. You should keep an eye out for investment possibilities across a variety of industries so that you can choose wisely and avoid making costly errors. Here's what you need to know if you want to purchase shares in 2022. Before we begin, don't forget to hit the like button, subscribe to our channel, and ring the bell icon for more informative videos. Number 1. LITHIA Motors Incorporated. Having 282 physical locations and hundreds of online shops, LITHIA Motors is a major car retailer in the U.S. LITHIA provides auto maintenance and repair facilities, and the company distributes parts under the Driveway and Green Cars brands in addition to selling new and used domestic, international, and luxury automobiles, as well as providing related financial warranty and insurance services. The business caters to both consumers and those priced out of the market who must maintain their current vehicles rather than buying new ones, which includes both purchasers and individuals in this latter group. Dividend-paying stock LITHIA is available. With a price-to-earnings ratio of 4.19 as of December 22, LAD is similarly value-priced. Analysts rate it as a buy. Number 2. Travel Plus Leisure Co. Travel Plus Leisure, formerly known as Wyndham Destinations, is a provider of hospitality-related goods and services that runs segments for vacation ownership, travel, and membership both domestically and abroad. The firm profited from a resurgence in travel in the first half of 2022, as seen by a 15.7% increase in Q2 revenues and profitability that above expectations. The average price objective given by analysts for the stock is $56. On December 22, shares are trading for $33.98. Number 3. Mueller Industries Incorporated. In North America, the UK, the Middle East, and China, Mueller Industries produces and markets plastics, brass, copper, and aluminum. In 1917, the Tennessee-based business was established. Among its business segments are plumbing, industrial metals, and environment. The Mueller shares have been comparatively constant thanks to a successful third quarter, and analysts believe the mid- and long-term outlooks are favorable. Given its low 5.20 P/E ratio, they grade the company as a strong buy and claim that it is undervalued. Number 4. First BANCORP. The parent company for First Bank Puerto Rico, which offers services to retail, business, and institutional clients, is First BANCORP. The company's recent quarterly and yearly sales and profits performance have been strong, and the stock currently yields 3.79% dividends. FBP is rated buy by analysts. Their typical target price is $17.20. Number 5. HERC Holdings Incorporated. Aerial equipment, air compressors, compaction, earth-moving and material handling equipment, trucks, trailers, and lighting equipment are all rented out by Florida-based equipment provider HERC Holdings. In addition, it offers labor, training, equipment maintenance, and repairs. For investors who purchase HRI today and keep the stock for 5 years, Yahoo Finance estimates a 31% yearly return. The average price objective set by analysts for the stock is $158. Number 6. Devon Energy Corp. The great financial performance, capital return for shareholders, and geopolitical circumstances that drove up energy stock prices all contributed to this company's stock's strong success. Devon said in June that it had reached a deal to buy Rimrock Oil and Gas's leasehold stake and other assets. According to a July 21 news release, the transaction, which was finished in mid-July, is anticipated to add more than 100 undrilled inventory sites and enhance Devon's Williston Basin output by an average of 20,000 barrels of oil per day. The value of Devon's stock has increased by 55.4% over the last year and by 45.73% since the year's commencement. Number 7. Marathon Oil Corp. Shares of MRO have advanced nearly 70% since the beginning of the year, while the Dow and S&P 500 have lost considerable ground. The effects of the Russian invasion of Ukraine are certainly a factor, driving share prices to just below their 52-week high before falling back some in June, only to soar even higher in November. A great deal of uncertainty exists around the short-term energy outlook, according to the U.S. Energy Information Administration, but analysts still recommend MRO as a buy. Number 8. QUALCOMM Incorporated. the market leader for 5G chipsets, and a significant participant in the wireless sector is QUALCOMM. QUALCOMM is a blue-chip company with a 10-year history of rising dividends. Experts believe it is currently extremely undervalued, selling at 9.51 times earnings despite the fact that competition is biting at its heels. In the company's Q3 2022 report, profitability increased by 53%, while revenue increased by 37% year-over-year, according to CNBC. QUALCOMM is a great offer at $108.56 as of December 22 compared to its typical target price of $147.33. Number 9. Berkshire Hathaway Incorporated. It would seem illogical that the most expensive stock in the world might be a good deal. But think about this. One of the most successful value investors in the world leads Berkshire Hathaway, a holding company for companies that represent dozens of brands in sectors as diverse as insurance, freight rail transportation, utilities, furniture, confections, batteries, and recreational vehicles, to mention a few. Since the start of the year, shares of Berkshire Hathaway have increased by roughly 4%. Of course, the majority will have to purchase fractional shares of the stock, which as of December 22 is trading for slightly over $452,000 or low-cost Class B shares of Berkshire Hathaway. Number 10. MICRON Technology Incorporated. Despite the stock price decline over the last year, MICRON checks many value stock boxes, including a low price-earnings ratio and an average target price that is more than 34% higher than the present price. The stock is being followed by 31 analysts, and their average recommendation is to buy. Within a range of $45 to $100, their average price target is $65.31. For a while, according to The Street's Stephen Sarge Guilfoyle, demand for what MICRON produces will outstrip supply and slash or capacity. Guilfoyle stated that MICRON's balance sheet gets great scores on the Sarge test and is as clean as a whistle. Because of this, several experts believe MICRON is oversold and set for significant gains. That's it for today, guys. What did you think of the video? Please share with us in the comments section below. Also, don't forget to hit the like button, subscribe to our channel, and ring the bell icon for more incredible videos.